What's up, guys? Welcome back to Everyday Money. I'm just going to go out there and I'm going to say it. I think that index funds are the best investment ever created. There, I said it, and I can already see you guys now. But hear me out. I didn't say that they were the best returns. I didn't say that they had the best tax advantages. I didn't say that this was the sexiest investment. I just think that overall it's the best. And when I say it's the best, out of the three paths to wealth that I like to talk about, which is business, real estate, or investing in stocks. So let's get started with index funds. I've always liked these because they are very easy to use. They're low cost. There's not a whole lot of work that you have to put into them once you've selected the funds you're going with. You pretty much just fire and forget, and you can put it on automatic and just let the returns be what they are. Like I said, the biggest advantages to this are that they are low cost to get started. If you're looking at, for example, like a Vanguard fund like VTSAX or VTI, for a VTSAX you're going to need a minimum of $3,000 to get into it, but you can get into essentially the same fund in an ETF through VTI for just the cost of one share of that fund. After that, you really only need $1 minimums to invest in that, subsequently down the road. It's kind of got a medium risk to it because it is invested in stocks, but you are invested into so many different stocks, being an index fund, and that's one of the biggest advantages of this is broad diversification, that the risk of being involved in stocks is kind of tempered by being involved in so many at one time that not one stock or sector can just tank your portfolio. There's very little ongoing effort with this. Once you've decided what you want to get into, be it, you want to get a tech index, or you want to do an S&P 500 index or a total market index, whatever. Once you've decided what that is, you just buy it, and then you can continue to invest money into that. If you want to diversify even farther into like internationals or whatever, you want to buy an international index, that's really just like one time that you have to do the research effort for that, find what you want to be into, and then just invest money into that as you want to, however you want to do that. There are low to no transaction fees in index funds, especially if you buy these through the financial institution that offers that particular fund. For example, like Vanguard, there are absolutely no trading fees if you purchase Vanguard funds. And that's those types of things can take a real bite out of your bottom line and some of these other paths to wealth that we're going to talk about here in just a few. There's also very predictable results for the most part. S&P 500 funds, total market funds, typically return the average 10% of growth and dividends that the market does over time because they are designed to track those things. So that is why I love index funds. You get a decent amount of return with a tempered amount of risk. They're very easy to use and very cheap to get in and out of. Now, while we're looking at all of these, let's look at the cost of entry to smashing the like button. I've driven the cost down to zero. The risk is also right about zero, and the returns are going to be you seeing more of my videos and videos like this in your feed. So go ahead and smash that like button, and we will get on to the next one. Next up, we have individual stocks, and this can really go one of two ways. There are people that buy and hold stocks long term, similar to like an index fund. The other hand is people that are traders, people that want to get in and out of stocks quickly. They think that they can find some piece of information of if a stock is going to go up or if it's going to go down. They want to trade options on it. And they just want to look through a company's financials and try to outperform the market. As far as trading or holding stocks, there is a relatively low cost to for admission. It could be anywhere from a penny stock down here to with not much value at all to ones that cost several $1,000s a share. And that sounds like a lot of money to get started, but compared to the two that we're going to talk about next, it's not really that big of a deal to get started with. And the ongoing cost would just be however much the share price that you are looking at to buy costs. So a company like Apple or Tesla or Berkshire Hathaway will cost quite a bit more money than like say GE or P&G or any of these ones that are down under $100 a share. Actually, P&G's been over 100 for a while, but any company that's below $100 a share pretty inexpensive to get into. There is a relatively high risk with these individual stocks. And people say, well, no, if you buy a blue chip stock or whatever, it has pretty low risk. At any time, something could happen to any company that would be very detrimental to it. And you could lose a substantial amount of money on one stock from something unforeseen, such as BP when their Deepwater Horizon rig blew up. Maybe there were people on the inside that knew that that was going to happen, but your regular everyday investors, they don't. When 737 Maxes started falling out of the sky, there was no way likely for the average investor to know that was going to happen. And then there's the Enrons of the world that look like they're the next darling company, and they've been cooking the books, and it all folds. And that's where you get your high risk. Something can happen, and it can all come crashing down for a stock that otherwise looked like it was in really great shape. In addition to the high risk, there is continuous effort required to determine what companies you want to buy, what their financials are, if they're overvalued, undervalued, if you want to trade an option on it because you think it's going to go up or down. It's just a consistent amount of work for you to continue to trade stocks or for you to buy and hold stocks and just make sure that they're going to continue to perform the way you want them to. As far as transaction fees, with sites like Webull and such, where they have no transaction fees to just trade equities, there are very low transaction fees to no transaction fees. So that's not really a big issue with this. And then as far as the returns, it can be anywhere when you're trading individual stocks. You may buy a stock and it goes up by 400, 500, 600%. You might lose everything in that stock and it goes out of business, or it may just trade sideways and doesn't do anything for an extended period of time, or maybe even forever. Let's get into real estate. Where I want to start with is that it has a very high cost to entry. You're going to need down payments as high as 30% of the value of the property that you're looking to take a loan on. You need to consider rehab costs, licensing, and there's just tons of fees. And this could end up being tens, hundreds of thousands of dollars just to get a building that may not have any tenants or any income stream to it initially. And so you've just purchased a building that you now need to make payments on, or if you've paid cash, you've put all of your cash into that one investment and it may not be making any money whatsoever. As far as risk, it's kind of a medium risk because you are buying a real property and it has an appraised value, and the chances of that changing in a major way short term are kind of low. The events of 2008 I don't think are going to repeat themselves anytime soon, and even then, you're not going to lose 100% of the value of that property unless you've purchased in somewhere that is just extremely distressed. But in addition to that, you have vacancies that it takes away your income for that particular unit, and decrease the amount of money coming in. You may have evictions where you're just not getting paid rent anyhow, and then you have to take someone to court and have them evicted, and that costs money, and then they're likely to do damage to the property, or at minimum, you're going to have to do something to just get it ready to re-rent, be it painting or cleaning or whatever, and that costs money. There could be building problems. You might need to have a new roof put on. You might have leaky pipes cause a ceiling problem. There's just all kinds of risk that can happen with any type of real estate. If you live in a home, you know how these things, stuff happens. And so that's why I put this in kind of a medium risk, because, those problems can be mitigated through good management, good buying good properties, making sure they're in good shape before you rent them, and that they're real property that won't go down in value, I don't think significantly, but there are legitimate concerns as far as risk goes. As far as the ongoing effort for this type of investment, it is a continuous ongoing effort. You have to screen and manage tenants. You have to potentially do the books as far as expenses and income so that you can make sure that you're getting all the tax deductions that you're eligible for, and that you're not getting in trouble with the IRS for not reporting income, unless you farm that out to professionals, accountants, and then again, that's more cost on your end. You have to maintain the building, maintain the grounds, and just have contractors on speed dial all the time for all of these things. And it's It is manageable. It seems overwhelming at first, but it does take a continuous effort on your part to do that. As far as transaction fees, they are extremely high. Just for your realtor, you're probably going to pay 6% of your sales price if you want to get out of a building. Now, when you're getting into a building, technically the seller is paying that price, but they've probably taken that into account and marked that up in some amount from 1 to 6% to try to cover their cost in selling that. Not only does it cost a ton of money in realtor fees, but there might be repairs that the buyer wants you to do on before they'll close, after the inspections. It might take you a long time to find a buyer, and then once you even get a buyer, then it takes a while to get to closing, close, get your money. I mean, this is a process that could take months or even up to a year if you have a large commercial property. And it's a big time difference between investing in index funds and stocks where you can just click a button and it's done for the most part. If you're in a mutual fund, it might take until like 6 o'clock p.m. But in real estate, the transactions are time and money intensive, and that is that's kind of a big time negative for real estate. However, it can be highly profitable, and I found this to be the case. Appreciation is going on all the time with your properties, as well as you being able to depreciate them on your taxes, and there's a slew of tax benefits for real estate investing. You're getting rent, and so I mean there are people paying you to live in that building. And that income is also paying down the mortgage if you took a mortgage on that. These assets are leverageable, and I know that you can buy stocks on a margin, but I've always felt very uncomfortable doing that. That's just me personally with my risk tolerance, whereas my risk tolerance with taking a loan on a piece of real estate that I don't think is going to go down in value significantly is a pretty safe bet, and it's done all the time, even though that is also a pain in the butt taking a loan for a non-owner occupied investment building. The paperwork is just like it's like this high. It's up here. It's out of the camera frame. It's crazy. So that is real estate. There are some very profitable returns, especially when you sell. If you can make a giant capital gain, which we have on a couple of properties, it's very profitable. But there is a medium amount of risk. There's a lot of ongoing effort, which makes this sort of like a business, even though I'm not really 100% on board with real estate investing being a business, but that is that. Okay, finally we get down to businesses, and this is something that I have less experience in. Some people might say that real estate investing is a business, and maybe that's the case. Some people say that YouTube channels are like starting a business. Again, maybe once I have a much larger YouTube channel, it will be like that. But for the most part, I think about people that are making things or providing a service like cleaning services, or like one of the trade services like HVAC, plumbing, electric, something like that. And the cost to start these up, it varies, but I would assume that it's usually higher than stocks, and it could be very much higher than even investing in real estate. It could probably be anywhere from a couple thousand to get off the ground with maybe a cleaning service to several million if you're going to start some sort of manufacturing facility or whatever. I just feel like the costs of that are everywhere. The risks of starting a business are medium to high, I would say. And the reason I say that is lots of businesses fail. According to the Bureau of Labor and Statistics from the government, only about 25% of businesses make it to 15 years or more. Needless to say, there's a lot of businesses that come into business and then are out of business relatively quick. So I would put that at a relatively high risk, especially with the amount of startup that you need as far as money and then just like mental and time. Startup, it's going to take you probably quite a bit of all of those assets in order to get your business off the ground. As far as the ongoing effort, it's an everyday effort, especially to get started. You are going to have to produce or do the service that it is that you're in business with. Now, maybe over time you can scale it to the point where you manage people or you manage managers that manage people, and it takes off, and you might be able to be a little bit more hands off. But I would still say that you're going to have to put in quite a bit of effort, every day to keep that business running well. For transferring, it's probably difficult to transfer. Now, maybe you just come into a situation where a large company comes in and says, I want to buy your company because they want your market share or your product or whatever. And maybe it's very easy. Maybe they just dangle a whole bunch of cash in front of you and it's like, poof, done. And you're on your yacht and you take that money and invest it in index funds and just, live off of that. But if you're looking to sell, it may be harder to find someone that's interested in taking over the business that you're in, taking over your systems, your employees, your debt, your revenue. That could be a tough thing to do. But business out of all of these is by far, or can be by far, the most profitable. You look at some businesses that have started in a garage, like Apple, Amazon, Google, Harley, Disney, Mattel, and then some local businesses that we have here like Braxton Brewing Company. It's a local brewery that started in their garage. It was a young guy that started brewing beer, and now he has several different locations, and I believe they're distributing nationwide. So if you've seen a Braxton beer, that came from a guy that started in his garage. Now, some of these other companies, your Apples, Googles, Amazons, I'm not sure if you've heard of some of these, Disney and such, they have grown to become multi-billion-dollar titans of their individual industries. And so that's where you can take a business to if you have the knowledge, the connections, you can put in the time to get that started. But overall, this is going to be your highest cost, probably your highest risk, but perhaps your highest reward if you're willing to put in the time. So taking all that into account, that is why I think that index funds are the best investment ever created for the vast majority of the population. They're very easy to get into, easy to get out of. They have fairly predictable results. The fees on them are low. They don't take a whole lot of mental or time, energy on an ongoing basis to invest in them. And, a lot of folks just don't want to get into real estate for whatever their reason is. There's a lot of very valid reasons. There's some not so valid reasons, like tenants calling you all the time. I haven't found that to be the case. A lot of people don't want to start a business and all of the stuff that goes into running a business, starting a business, trying to keep it afloat, especially, when the government just goes and shuts down large swaths of the economy just willy-nilly sometimes. And then investing in individual stocks also has a very high level of risk that any one stock could either just crater or it could soar. It could go way up, but there is a lot of ongoing effort in that as far as knowing what stocks to be in and when to try to get in and out of them to, try to beat or match the market. There's just a lot of reasons why I think that for the vast majority of people, index funds are the premier investment that they can use to grow their wealth and get their money working for them. So I hope that you guys out there got some value from this today. If you did, be sure to smash that like button for me. That really helps out in the YouTube algorithm. Be sure to subscribe if you haven't to grow your wealth, increase your success, put you on the road to financial freedom. We just crossed 100 subscribers, which is super cool. I want to thank everyone out there for that. Let's boost this up to the magic 1,000 mark. I appreciate you guys watching today, and I will see you on the next one.